Welcome back, everyone. Michael here with Offshore Citizen. Today we're going to dive into something that might be very interesting to a bunch of high net worth individuals or people who are earning a relatively large amount of money abroad. If lots of people think about their ideal place to live or to retire or whatever, Italy comes to mind. They can see, the beautiful coastlines of the Amalfi Coast, etc. You might like, Milan, you might like Rome, you might like Florence, you might like who knows what, right? All these different areas. But a lot of people love the Italian lifestyle. And Italy, it turns out, has implemented a number of different really favorable tax regimes into their system. And so in this video, I'm going to cover their lump sum tax regime, how it works, whether it might apply to you, and we'll dive in from there. So before we do that, if you haven't already, please smash the subscribe button, nail the notification bell. Really appreciate your subscription. And if you'd like help with anything to do with international structuring, either for yourself personally or for your business, you have a company locally that you would like to optimize the taxes for by using international structures, or you'd like to relocate abroad, get second citizenships, get second residencies, invest abroad, etc., please reach out to me. You can book a call, calendly.com/Michael-Rosmer. There's a link conveniently in the description below. Or you can send us a message through our website, offshorecitizen.net or offshorecapitalist.com. Okay, so I've talked previously about the Greek program. We're going to talk today about the Italian program. This is for people who have not been tax resident that is, in Italy for the previous 9 years, okay? This could apply for both Italian citizens or non-Italian citizens. The requirement is simply that you were not a resident for the last 9 years. This is a regime that lasts for 15 years. So basically from the time you go, you can maintain this status for 15 years, although it doesn't have to be maintained that long. And basically the way that it works is you can just pay a flat 100,000 euro per year flat tax on all your foreign income, and that's that. Now there's a couple exceptions to this, so I'll get into that in a second. It doesn't have to be maintained. So if you say are going to have some big earnings over a period of a few years, maybe you're like, hey, we're going to be draining dividends out of a company for a few years, and we want to take advantage of this 100,000 euro flat tax, you can do that. And then a few years later, maybe you're like, okay, my income's dropped. You can opt to go to the normal tax regime and be good from then on. Now, their normal tax regime isn't good, but that being said, you can do this. So in addition to the 100,000 euro lump tax, there's kind of three benefits. Number one is you're exempted from gift and inheritance tax, which is normally a pain in Italy. Number two, you are exempted from wealth taxes, again, annoying. Number three, you're exempted from foreign financial reporting. So there's rules around foreign financial reporting and disclosure, which kind of violate confidentiality, etc., amongst Italian tax residents, and you're exempted from that under this regime. So for 15 years, you can have that. You're able to benefit from the tax treaties, so that could be useful, right? If you're saying, hey, where am I tax resident? You're there. Lots of good stuff to being able to claim and show and benefit from the array of tax treaties, etc. That could be quite useful. The exception on this, with respect to the foreign income, it applies to dividends, it applies to financial income, it applies to foreign employment income, it employs self-employment income, etc. So these are all good. The thing it doesn't apply to is what they call qualified shareholdings for the first 5 years. So basically, if you own over a certain percentage of a private company or over a certain percentage of a public company, then the sale of those shares is not necessarily covered. Now, realistically, you could throw these into a holding company, you could sell them, and then you could distribute a dividend and you'd be fine. So, there's things to work around there. Being aware that, of course, you do need to consider Italian corporate tax residency rules, and so make sure that you don't end up in a situation where a foreign company suddenly becomes considered a local company for Italian purposes. So that's something to consider. And I did a video like quite a while back, one time when I was in Florence or somewhere, describing a little bit of international tax planning for Italians. So you can go and take a look for that if you'd like to. Now, the other things to be aware of here, kind of again, pros and cons, is of course you have to still get a visa. That's one thing that is relevant. Now, as I said, it only applies to foreign income, not domestic income. However, there's another tax regime. I'll do a video on that as well. You can be able to check it out. which allows people who are newly moving to Italy to benefit from much lower tax rates. And so you can actually combine these regimes, which is pretty cool. So that's possibly something that would be helpful to you. If you have some local income and some foreign income, of course, if you go and buy Italian property or something, there's going to be a consequence to that. But yeah, this is the deal. I think for a lot of people, if you just kind of think of it, you're like, okay, if I'm making $1 million a year, that's 10%. If I'm making $2 million a year, that's 5%. If I'm making $10 million a year, it's less. So it corresponds approximately, I think it's like to their normal tax rates on 300 and some thousand euros a year for financial income. So it gives you some idea of where you might fit into this spectrum. And that could be really quite helpful for a lot of people. So I hope that's helpful. If you have questions about it, if you're interested in like, okay, well, how would I tax plan around this in my situation, please reach out to me. Again, you can book a call, calendly.com/Michael-Rosmer, link in the description below. If you like the video, give it a thumbs up. If you have questions or feedback, please put them below. If you liked the video, please share it with your friends. If you didn't, hey, tell me why. I'd love to hear the feedback. And I'm going to look forward to seeing you guys on the next video.